Let's see here. All right, we are connected. Sorry, a little technical difficulty here. All right, we are live. So welcome back to Dapp University. So, we've seen a ton of headwinds in the crypto space this entire year. We've seen this in the stock market. We've seen a lot of problems with the broader economy. And one of the big questions on the people's mind pretty much all year is, are we in a recession? Okay, we just got some data that came out this morning that basically seals the deal on that. So I'm going to talk about that in this video, what that means for crypto. One of people's biggest fears in the crypto space is like, hey, we've never been through a real recession before. Okay, with some caveats there. Bitcoin's created after the last great financial crisis. Okay, so there's lots of questions on the table about this. So we're going to talk about all that in this video. Also look at what happened yesterday with the federal funds rate increasing. Okay, what that's going to do for the crypto market. So before we get into that, if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to master blockchain step-by-step start to finish, then head on over to dappuniversity.com/bootcamp to get started today. All right, so we got people jumping in the chat here. We got Cody, let's see, Ruff, let's see here, Latricia, Rosendo, Larry, Stefan, let's see here, Nick, Brandon, welcome. All right, so let's go ahead and jump into this. So, like I was saying before, we've seen a ton of headwind for the entire crypto space, all markets alike, since the beginning of this year. Cryptocurrency prices have been quite depressed. We've been in this bear market. And one of the biggest factors, among other things, is essentially what's going on with the broader economy. Crypto doesn't exist in isolation. It's affected by external factors. And that's what I try to educate you all about on this channel and what that does to the crypto space. And so, we see, one of the big questions in people's mind is what's actually going on with the broader economy? Is it growing? Is it actually shrinking? Because that's one of the biggest indicators of a recession. And this morning, we just got news that came out that the GDP fell 0.9% in the second quarter, the second straight decline and a strong recession signal. So, I'm going to talk about the debate on how people define recessions here in a minute, because that's an important factor here. But let's just put it this way. Most people use a general rule of thumb to define a recession as 2 consecutive quarters of negative GDP growth. So what is GDP? Stands for gross domestic product. It's basically all the goods and services produced. We're talking about the United States here. The sum of all those things together. Did that number grow or did it shrink? Okay, so in Q1 of 2022, this year, we saw that number shrink, and basically, all throughout Q2, which is basically like, we're sitting here looking at everything, every single economic measure that you could possibly think of, stuff looked worse than Q1. Okay. Which indicates shrinking. So it's like say, hey, most of that time I was saying, hey, we're probably in a recession based on the other factors that we're seeing on the table. So we had to wait some time for that data to come out, but we do get confirmation that it fell for a second consecutive quarter, fell by 0.9%. It's a strong recession signal. Now, I want to be very clear here. That who actually gets to define what a recession is. So officially, the National Bureau of Economic Research declares recessions and expansions and likely won't make a judgment on the period in question for months, if not longer. Okay, so first of all, you have to understand that we won't actually get an official definition of what we're in is actually a recession until the National Bureau of Economic Research declares it. And you're getting a lot of people that say, hey, well, guess what? Like the 2 consecutive quarter rule isn't an official measure of recessions. There's other factors that we have to get in play. But from my understanding, pretty much every time you see, negative GDP 2 times in a row, if you use the other measures, you're basically going to find yourself in a recession. So the other point here is essentially, if you're a programmer, you understand the idea of like duck typing, or maybe you don't. I'll explain what I mean by that. It's basically like you're saying if it looks like a duck, if it walks like a duck, if it quacks like a duck, it's a duck. Okay, we could use a bunch of fancy, terms, and we could use create a bunch of new ways to measure something. But if it feels like a recession, we have a general rules of thumb that have always applied in the past. Like it's probably a recession. Like people, are able to afford less than they were before. By every single every single measure, we see the economy performing poorly. Okay, so in my opinion, the numbers that we're seeing come out today are a strong indicator that, yeah, we basically are in a recession. But of course, for full disclosure, we won't technically know what the sort of powers from on high are going to declare this as until many months later. Okay, potentially. So what does this mean for the entire crypto space? So one of the biggest fears, that people have for this type of thing is that crypto's never really experienced a prolonged, recession like the one we're in right now. Basically, technically what happened with March 2020 is a counterpoint to that. Okay, but that was basically what happened then was essentially we saw this quick, sharp decline, but we had a lot of monetary expansion that kind of really, really canceled that one out, okay? So when we're talking about crypto, Bitcoin in particular being created after the great financial crisis in 2008, since then, it's basically been a time of economic expansion, somewhat uninterrupted since then. It's been one of the longest, continuing kind of periods of economic expansion and bull markets that we've seen in recent history, okay? And so Bitcoin's entire life has essentially existed in that, and it hasn't really gone through the time of much tighter monetary policy, longer economic downturn. That's one of the big fears people have about crypto on the table right now, okay? So what does that mean? Well, if we look at the short term, okay, let's just look here. If we look at the short term, we don't see really sharp, correction in the crypto market in the short term. Okay, so based on past hour to 2 hours worth of data, we don't see a big panic in the marketplace. Now, some of that's got to do with yesterday's data from the FOMC meeting and the interest rate hikes. We'll talk about that here in a minute. But the other thing you have to understand is, Bitcoin created after the great financial crisis, in 2008, or as a response to that, we had the idea of trying to create a hard money that couldn't really be tampered with in this way. And so we'll have to see if, how that narrative sort of plays out for Bitcoin over the long term, especially in response to what we're seeing, now. So let me just pull up my thing here. Sorry, I lost my screen here. So yeah, what we're seeing right now in the short term is not any type of quick panic in the crypto markets, right? We're starting to see stuff start to, kind of smooth out, and actually saw yesterday a 15 to 20% increase in some crypto assets across really short time periods. All right, ETH was up 10% on the 24-hour time frame. So what was happening there? Well, yesterday, we've been talking all week. This is a big week for crypto, that we're going to get the GDP data, which we saw this morning, which basically indicates that we are in a recession. Again, if you're just tuning in, I've very clearly outlined that there's going to be people who say, hey, you can't say that yet because we don't have the official declaration from the Department of Labor. The National Bureau of Economic Research. Sorry, not Department of Labor. So yeah, definitely go check on that. But we saw what happened yesterday with the interest rate hike. So essentially, we saw at an FOMC meeting yesterday, which is when the Fed meets essentially and starts talking about the federal funds rate, okay, about what they're going to do with that, whether they're going to increase it or they're going to decrease. They're just going to set it, right? Is it going to be an increase? Is it going to be a decrease? We're going to see rate hikes. And yesterday we saw that the Fed actually increased rates by 0.75% or 75 basis points. So what does that mean? So essentially, we're talking about the cost of borrowing money, which has a pretty big impact on growth, on businesses, all that type of stuff. We see this big correlation with this, with low rate environment, accelerating fast growth because it's cheap to borrow money, it's cheap to grow. And we've been talking about rate hikes since the beginning of the year. And the real question in the market's mind yesterday was we were going to get a surprise. Okay, so we saw a 75 basis point hike. Most people would think that, hey, that's bearish and that you'd see markets react negatively. But I think the bigger picture here is that markets don't like uncertainty. And that was one of the reasons that we've seen price depression prior to that rate hike. But when they got the rate hike that we expected, we actually saw crypto increase, kind of make a pretty big jump yesterday. Okay, we can see like what happened on the ETH chart for that timeline. This was before the meeting. Okay, I saw a lot of people probably trying to front run the meeting, maybe make a bet on the trade, and here's where we sit after. Okay, so we got the rate hike that we expected, which again, the rate hikes aren't necessarily good for growth-based things over the long term, but in the short term, it's really about uncertainty. Did we get what we expected, or did we get something wildly different than we expected, either to the positive or the negative? And we got what we expected. So we got some people saying 10K BTC soon. Let's see here. Is the recession already priced here? Yeah. So we're talking about people redefining the. Yeah, we looked at that on the website on Monday during a live stream. That's when my computer promptly crashed. So we're not going to pull up that website again. So let's actually take a look at some of the critical levels right now. So there are some pretty critical levels that Bitcoin is testing right now, okay? And this is actually pretty important. So again, I'm not a huge proponent of technical analysis. I don't try to use it to forecast, really short-term price moves, but it is important to find, lines in the sand that other people are watching to try to spot trend reversals, okay? So here's the 200-week moving average, which is sort of the lower bound of Bitcoin's price across most of the past bear markets, okay? So basically you can see that in all these really bearish territories that Bitcoin's been in, we've come down and either bounced off this line or broken below it, but we didn't spend too much time below this long-term moving average, okay? And so, we, from our previous lows that we just went through, right, we broke down below it. We spent several weeks, closer to a month below it, and now we are getting above it. We're testing this as more resistance, and can we break through this? And this is a level that a lot of people are going to be watching for crypto, to potentially be forming a bottom. Now, I've been talking for months, maybe about a month on this channel, that there's lots of bottom signals that crypto very well could be forming a bottom. It's too hard to tell in real time. I don't try to be a top caller or a bottom caller because the risk reward is just not really that great. You know what I mean? So that being said, though, the question on people's mind is, hey, if we get this stuff like we're in a recession, like how is that going to mean that crypto's going to form a bottom? Wouldn't that just be totally bearish? So there's lots of people who are thinking like, hey, this could be a bear rally, then we could just bounce off of higher resistance and then just ultimately go lower from there. But it is possible that we could continue on an upward trajectory and actually see a bottom form, okay, even if we get this news of a recession, because that doesn't necessarily mean it's game over. It just means that it's uncertainty for the markets. But that being said, the recession, talking about markets not liking uncertainty, one thing about the recession is a lot of people think it's just priced in, all right? So a lot of the stuff that we've seen in crypto already has been like, hey, like we know what the game is. We're risk off. A lot of the forced selling, a lot of the majority of people who are trying to exit the marketplaces have already done that, all right? And a lot of the long-term holders are still here. And essentially the whole idea with recessions is that markets lead the economy, not the other way around. So if a lot of the selling, a lot of the pain has already been felt, which was really, during the recession, because if that's what these 2 quarters were, then we've experienced a lot of that and the effects, and like getting the news and the information of it later means you're just telling us about something that we already felt and experienced in hindsight. And if markets lead the economy and not the other way around, then the market could also lead a recovery before, you know, the entire world catches up and then waits for the official announcement of what the recession actually is, you know, once it's firmly in the rearview mirror. Okay, that is a very possible scenario on the table for crypto, is that it, you know, I'm not saying the crypto market's going to lead everything else, right? But what I'm saying is the things that are influencing the crypto markets, that are influencing equity markets in tandem, that those type of things could already be pulling us out of the situation that we're in because of markets leading the economy and not the other way around. So let's see here. They think it's a fake rapto. They think it's a fake rally in the crypto and it will end again. So I hope it happens. I'm tired of red. Yeah, totally. Says I bought a bunch of expensive trucks and now I'm having a hard time selling them. A few months ago I could sell anything. Yeah, I totally get it. Yeah, the dynamics have changed, and that's the thing, is like indication of the time that we're in. It's like I was saying before. It's like a duck typing. It's like if it looks like a duck, it walks like a duck, it quacks like a duck. It's probably a duck. Okay, and no amount of well, let's wait and see. Let's consider these other metrics, and then confer about our official opinions is going to change the fact that most like the reality of a recession. The reality is that most people are experiencing recession. So it says, yes, markets priced in last 6 months upcoming recession. It started then today we have official 2-quarter gap negative, which is long, like 6 months, but still indicator we're in recession. Yeah, totally. That's basically my view. So, so it says real economy has been in bad situations before 2019. Yeah, I can see that. So another thing to watch out for in the short term on an asset like ETH is, what's going on with its price action. So let's see here. So one thing to watch out for Ethereum in particular is, of course, we got the merge coming up, and I don't have my fancy chart pulled up for ETH, so I can't really draw a bunch of lines on here. But basically, let me just pull up a log chart. But basically, you could easily draw a resistance line through here that's talking about ETH's downtrend from its peak to this sort of attempt at recovery here to sort of the attempted recovery we're in right here. And if we saw ETH start to, over time come out and break that trend line, okay, that's going to be bullish for the asset itself. And the real question on the table is, can ETH do that in terms of the Ethereum merge that's coming up? Because again, this is only a few short days away. I say that with a grain of salt here. But yesterday I put that tweet on my Twitter. Ethereum merge is only 54 days away as of yesterday. So today it's 53 days away. This is the advertised date, at least September 19th. Of course, this could push back. It could hold it with a grain of salt. But after this, Ethereum is going to become deflationary or negative issuance. Ethereum is going to become proof of stake. This is going to be a huge confidence booster for the ETH space because it essentially is going to, show that people. It's going to. I saw a talk with Vitalik yesterday. We'll talk about it maybe on our live stream more yesterday, saying that essentially that this is going to be a huge thing for ETH because it's going to boost the morale for the space. Okay, there's a lot of headwinds for the entire crypto space in terms of its global perception, especially with like environmental concerns. But we're talking about proof of stake, erasing a lot of those concerns. So that's going to be big for ETH. Like, it's going to basically be able to completely sidestep that accusation in the first place. It's going to be negative issuance. We'll see confidence in the Ethereum core teams to actually execute on their vision and deliver things when they say they're going to. Okay, so that's going to be big for the overall morale of the entire Ethereum space, which could sort of amplify the merge trade that we're seeing on play out right now. So again, the merge trade, what's the whole idea here is we could, there's a lot of people are going to be piling in trying to accumulate ETH before the merge happens. And it could be a buy the rumor, sell the news situation where trying to pump up the price before the merge event actually happens. And then, either right before it happens or, right after. Could see some sell pressure there. Again, I'm not trying to treat this as a short-term trade. If you've been watching this channel at all, you definitely know that ETH is my largest position. Okay. And, I have a huge, vote of confidence on the ETH ecosystem for the long term, and so I'm definitely watching ETH well beyond the merge. Okay, but we could see some short-term pump ahead of time. But it's hard to know how that's going to resolve after. Is it going to resolve in a dump? Is it going to have staying power? The other big question on the table is a lot of people think that all the ETH is instantly going to unlock whenever the merge happens, and then people are going to unstake their ETH and just go instantly dump it. That's not actually going to happen. Like, it can't happen. And this is a big misconception. Many people think that so you have to understand right now, we have two chains. We have the main Ethereum chain that everybody uses right now. Then we have the Beacon chain, which is this new blockchain that's actually running proof of stake. It doesn't have any real activity on it other than just the staking. So those two chains are going to get merged, hence the merge. And right now, if you can stake Ethereum or Ether right now by sending it to the Beacon chain and running a validator, but you have to lock it up. You can't actually get it back. It's not liquid. And it will become liquid after the merge, but not right after the merge. That's what a lot of people get wrong. They think that the merge is going to happen, all this ETH is going to become liquid, and people are just going to be able to withdraw it and instantly just start dumping it because it's been sitting there since 2020. Some people have. Like, the initial stakers started locking up their ETH in 2020. I put a video out at the end of 2020 to being like, hey, like, reasons you should not stake your ETH. I'm not saying you shouldn't necessarily, but here are the reasons why you wouldn't want to do it. And one of those was like, hey, it's going to get locked up for a long time and you don't know when you're going to be able to get it back. Of course, everybody knew that. Well, many people knew that. But so anyways, it will become available again, but there's going to be a post-merge cleanup period that's an undefined amount of time, okay? So it's not like we're just going to have the merge happen and then you're instantly going to be able to take your ETH out and then just dump it on the marketplace. So that will not be a big factor in the selling that I think many are concerned about. Why is market pumping? It's a bit of a conundrum how this is all going to affect things. I think in the short term, for sure, the market pumping, based on the numbers we saw come out yesterday for the interest rate increase, and that the interest rate increase was within people's expectations. Not necessarily that the interest rate increase is in and of itself a good thing, but because it met expectations. That's the whole idea, is markets don't like uncertainty. And now that uncertainty is a known factor, that's one of the variables has been eliminated from the equation, that we can see confidence return into the marketplace. And one of the reasons we're seeing crypto up on the 24-hour time frame. Now, there's another perspective out there. Again, on this channel, I don't try to tell you I think I know exactly what's going to happen next, but to educate you on the situation at hand, talk about probabilities and multiple perspectives. One perspective is that we are in an irrational bear market, that things are bad, that we're seeing obvious signs of a recession, and that everyone in crypto is, sort of like, delusional, and that we're in a bear rally and it's going to sell off. And we're going to revisit the lows or make new lows. That's another perspective on the table. We need new ups, not new lows. All right, everybody, that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That helps these videos out so the more people learn about blockchain. And if you're as fascinated with this technology as I am, you want to get your hands dirty, how can you get started today? Well, you can go to my YouTube homepage. You can find my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you want to take a master shortcut entirely, I can show you master blockchain step by step from start to finish over at dappuniversity.com/bootcamp. You've been an expert to get started today. I've helped people with zero coding experience become real world blockchain developers in a matter of months. So that's all I've got. Until next time,